you hear me better now? Looks like it's working now. All right. Sorry for that complete disaster. So let's start from the top. Okay. All right, let's go from the top. Welcome to this video. Let's get this going then. All right, so I'll delete that out afterwards when it's processed. Okay, so the Bank of Canada hiked its rate today. Obviously, that's what happened. We all heard about it, but it's very, very interesting that they've done this because now it's the start of a rate hiking cycle. You know, a lot of people are looking at the rate, they're saying, well, it's only gone up to 0.5%. So how much is that really? And it's not that much. But when you've got a highly indebted economy, as we're going to go through with examples of other economies like New Zealand that are further down the rate hike cycle than we are, you're going to see the effects of what's going to happen, because that is the most probable thing that will happen, because it's already happening in other countries that have had housing bubbles, similar household debt levels, and everything like that. So anyway, we're going to whiz through this because I'm not going to go through the whole thing again and bore the hell. Thanks to anybody who stayed on here. And hold on, I'm mixing my second drink. Oh God, what a nightmare start this was. I'm so sorry about that. I'm glad I looked in the chat. Thanks for the super chat, Greg. This microphone, oh my God, it cost $150. So yeah, that's what you get, what you pay for, I guess. The Bank of Canada today increased its target rate for the overnight rate. Yeah, we all know that. It also talks about Ukraine and what's going on there. It acknowledges, though, that that's going to add to inflation, that this is going to be an inflation crisis, essentially. And commodities are absolutely going parabolic right now, guys. And the thing is, I am really starting to doubt that they're going to just, I think they're going to have to amp this up. I really honestly believe that. And maybe this is the great reset, that they're just going to hike rates to 10% and absolutely kill everybody who has any debt. And then you will own nothing and be happy, because that's essentially what would happen. But I don't know. But the thing is, I think with where commodity prices are going and how much this is going to start to weigh on inflation, it's really going to change, and they're going to have to do something, because if they lose control of the money and we start to get, like, you know, hyperinflation essentially, because the only thing that holds this currency system together is faith. That we all have faith in the dollars that we're losing. People are already starting to lose faith in the dollar system. They're going and buying gold. They're going and buying silver. My friend works at Silver Gold Bull, and he told me all this stuff. So, you know, it's happening, and it's kind of crazy. So it basically talks about the economy, about the scary and everything that's happening. It says that the slack has been absorbed here. And the funny thing about that is it really hasn't, but it's just incredibly interesting that they think it has. Like they are clowns. They don't have a clue. They don't live in the real world, just like the politicians. And the fact is, the World Economic Forum has had many links to the Bank of Canada. So I don't know. It's very interesting to me that they think economic slack has been absorbed. They mentioned that inflation is pushing really high, but this is the part that I highlighted there. The bank will use its monetary policy tools to return inflation to the 2% target. And that is very hawkish to me. That means that, to me, they're saying that we're going to use our tools, which is hiking rates, because that's really hiking rates and quantitative tightening are the only two tools that they have. And they've even talked about, if you look right here, they even talk about QT, and I tweeted this out in the morning. So they, just like the Fed, are now considering QT, which is reducing their balance sheet. So they'd actually be selling Government of Canada bonds, which is just, I mean, this sort of stuff is just insane to say the least. Because anyway, we're going to get more into New Zealand tonight, and that's really going to give us, instead of trying to speculate on what's going to happen, let's look at a place that has hiked rates to 1%. They went to 1% last week, and let's see what's going on in New Zealand. So anyways, let's switch quickly to GDP. I briefly got onto this before you guys were saying about my mic, and I'm so sorry about that. I'll cut that front part of the video out. So anyway, basically, just ignore this part right here. So this is Statistics Canada's website. So just ignore this. So I'm going to highlight this in red. You want to pay attention to this side, which is basically where we're going to want to look. So the GDP, this is how much it shrank month to month or gained month to month. And if you actually look into the GDP, the thing I wanted to highlight, which I just find absolutely insane, is the energy sector is actually shrinking. And this is the second month that the energy sector is shrinking here in Canada, where we have tons of oil, where we should be producing more and more. But the thing is, we're at capacity right now. Like, you can't shove more oil down the pipelines that we already have. And Biden canceled Keystone XL, so that pipeline's dead. So you can really thank Biden a lot for the high gas prices, because obviously gas is priced on the open market. So whatever weighs in the US translates through to our gas prices here. So it's interesting. You know, the cannabis sector grew 2.2%, which is pretty large. The mining, oil and gas extraction, again, a big decline here. So right at the time where you think that this would be the strong part of the economy, it's the complete opposite. You've got the energy sector, oil and gas, it's in the tubes. It's actually contracting. So, and that all goes down to banks don't want to invest in oil and gas because the government is saying, oh, we're going to have to be green energy and everything like that. So retail trade was another thing that shrank significantly. And this is down a lot now. And it's only up 2.7% since December 2020. And think about December 2020 and where we were. We were much more opened up in December 2021 than in 2020. And again, down. So lots of weak growth and lots of shrinking industries. So it says a lot, really, of what's going on. And it's kind of insane. So anyway, that is enough of that. One thing I also wanted to talk about, and this is before the hike has even happened and we're getting this. So we're going on to now corporate bankruptcies. So obviously this is something that we want to pay attention to massively, is basically how many companies are going bankrupt. So after pretty much quiet season in terms of bankruptcies, because of obviously the stimulus, the low interest rates, everything like that. Obviously, since the interest rates have started to tick up, we're starting to see bankruptcies rise. And if we look at the bankruptcy chart, you can see how those interest rates are having an immediate effect on the amount of companies that are going bankrupt here in Canada. I mean, we know that the bond market rally really started off in October, and look at the bankruptcies compared to all the other months. So we're going to have to keep an eye on this because it's incredibly important. If you look at where it is historically, it's still low, but who knows how high this is going to go now? And we've just had an interest rate hike. So it's going to be interesting to say the bond market moved a lot today, but it's nowhere near its highs. So it is very, very interesting to say the least. So I want to go over to a chart just to illustrate where we are with interest rates. And you can see here that we are still very, very low. But where we were before at 1.75% is a long way to go. Okay. That is a long way. No question of a doubt. Do I think we'll be at 1% this year? Yeah. I think we're going to get to 1% easily. I would think so. They may pause for 1 month or one announcement or whatever. New Zealand did the same. So I'm expecting them to do that maybe. So that's probably going to happen. And that might be next month where they're kind of seeing how things play out. But these things don't normally have an immediate effect. And you saw the bankruptcies there. The bankruptcies are up. So we are way down here. But the thing is, unlike before 2020, let's look at the debt levels, because that's really going to show what's going on. So if I switch, and we still haven't got loads of data on this yet, so we're just relying. But if you look at how much the debt increased, and this is private debt, so this is like businesses and everything like that, the debt that they hold. If you look at how high this is right now and how much that increased, that is why interest rates, you're not going to have to get to the highs that they were before to see things start to happen, because the amount of debt now is so insane that it's really it's just a different ball game to what we had back then. So the thing is, it is different. I'm going to see if we can get on to no, I can't find it, but household debt's on here somewhere. I should have put that up as well. But it's the same thing. It's just gone parabolic, essentially, since the start of the cerveza sickness. Now, I want to take you quickly to Switzerland, because Switzerland, a lot of people are always saying in the comments, inflation is a global issue, Luke. What on earth are you on about? Okay, all right. So this is for you guys. I don't know what's going on there. Oh, there we go. So let's share this. There we go. So this is Switzerland's inflation rate. So as you can see from this chart, they've got their inflation under control. It's below 2%. So people who are telling me that inflation is a global thing and it's happening everywhere, it's not. If you look at where Mexico's inflation rate is compared to where it's been historically, it's not at all-time highs. But if you look at where our inflation rate is compared to history, it is at all-time highs. And we have one of the most corrupt inflation, not corrupt, I don't know what the best word is, but we have a basket for inflation that heavily understates it. So that is one thing that definitely is key. So let's move on to New Zealand. So New Zealand is a special case. So this is New Zealand. Now they just literally hiked on whenever it was, March. No, it wasn't March 1st. It was whenever their meeting was. When was it? I don't know. I thought it was last week, 2021. 21%. Yeah, the 23rd of February. So I think 2 weeks ago. So if you look at this, the Reserve Bank of New Zealand raised its official cash rate 25 basis points to 1%. Now, before that even started, when they were at 0.75%, so really just want to drill this home, 0.75% they were at. We're going to go through an article of what's going on in the housing market, and they're at 0.75%. I just want to say that again, 0.75%. So it's just insanity. And if you look at where they've come from, I mean, in 2015, they had rates of 3.5%, but when they actually dropped the rates right down, they were at a similar rate to here in Canada. So they are a good country to look at. So it's very interesting what they said. So look at this. Amid soaring inflation and surging house prices, this is going to be a theme for these hikes. House prices are becoming a massive issue. And a lot of people don't think it is an issue. But the thing is, it's all debt growth. It's not actual wealth. It's all debt growth. And people are taking more and more and more risk. And that is bad news for later down the road, because eventually these people who took a lot of risk are going to get eaten alive. And it's just and the thing is, they're saying also, if you look at this, they're going to start QT. They're starting QT. So it is happening in New Zealand. And this is a country that arguably had one of the tightest restrictions in the whole world, New Zealand and Australia. They were, locking down for a couple of cases and stuff like that. So it is insane. And they've gone to 1%. Now, they paused for a month, I think it was, a meeting, if you look at this, which was this one right here, where you can see they did pause. So I'm expecting probably a similar pause, but maybe we won't get one. Maybe it will just go straight up. But they started from the same interest rate, 0.25%, and now they're at 1%. So we're going to follow New Zealand. I can guarantee you that. So let's move over to this, which is a great article, and it came out, when did it come out? 1st of March. So it's fairly recent, and I'm going to zoom in and then blow it up on the screen. New Zealand property market, asking prices plummet in some parts as more houses available. So all this talk of supply and, oh my God, there's no houses on the market. Again, we've talked about it on this channel. I know you guys know this, but a lot of people don't know this who are uneducated to financial markets. But it even happens in stocks. When you get to the top in any market, there's very little people who are there willing to sell. Usually that last leg is very low volume, or there's very low volume on the sell side. So it's basically the price growth of that stock at the very last leg is essentially because there's nobody selling, a lack of available shares, a lack of inventory in the case of real estate. So it happens because people are not selling when prices are going up. They're not selling. They're going to put it off. They're going to say, honey, we don't need to sell the house right now because prices keep going up every month. Why the hell are we going to sell the house? But when a couple of interest rate hikes come in, that's going to impact what people can afford, whether they think it's going to or not. Now, the interesting thing before we dig into this is obviously that when you get that first initial hike, you're going to get a load of mortgage brokers and realtors pushing people with FOMO. And they're going to be pushing people saying, oh, you need to lock in that low rate. And it's going to be like trying to catch a falling knife for these people because they don't know or understand economics. They don't understand cycles or market psychology like we do on this channel. So they're really uneducated to that. And you can't help but feel for these people because they're the ones that will ultimately be the first to lose their houses, the first to lose everything. And they're the ones who've been misled and misrepresented by their realtors and mortgage brokers. Now, don't get me wrong, there is lots of good realtors, lots of good mortgage brokers, but they are a minority. They're the 10% in a sea of just reckless, money-hungry people. And they I've met many, many realtors, I can tell you, and it's hard to find a realtor that actually has your best interest, like Scott Walters. This is a good plug for him coming on, because he's coming on Friday and we're going to have a chat. You know, me and Scott, we talk a lot, and Scott is a great guy. He really has the interests of the buyer, and he's the guy who's calling out the housing market right now, and he's the only realtor that I know of that's doing it, and it's kind of insane. So anyway, that's enough of my spiel, so let's get into this. So more houses available to buy and a monthly drop in the national average asking prices are hints the property market is cooling, latest real estate data shows. Now, the thing I want you to have in your head, this is the start of a correction right here. So we're not looking at massive declines, and obviously the real estate industry, you have to remember, is always going to look at the lens, well, prices are still up over last year even though they're going down, so what's the problem here? So you have to remember that, the way that they'll probably word this. But yeah, it's very interesting because supply is going up drastically, which is because loads of people, surprise, loads of people were holding off selling. And as soon as they start to see that market turn, they all try and time the market and all start selling at the same time. The same thing happens in the stock market over and over again. If you look at when stocks hit all-time high, they'll go up. They'll go like $10 maybe, some of them, past that all-time high. And then all of a sudden, there'll just be a massive drop that will come out of nowhere. And that's everybody trying to sell the top. And you will get the same thing happen in the housing market. So releasing its February report on Wednesday, property listings website realestate.co.nz confirms nationwide property listings at 11,545 are up 7.5% year on year, making a return to February 2018 levels. So it's pre-Cerveza levels. The housing market has returned not just to pre-Cerveza levels, to 2018 levels. So that is very interesting. And actually, I'm just going to flick and see what interest rates were doing at that time in 2018. So interest rates back then were at 1.75%. But I just wanted to see, no, so there was no activity on the hiking side during that. I just wanted to check. But anyway, let's blow it up again. Where is it gone? There it is. Okay. So at $993,000, the national average asking price for properties dropped 0.5% in February, the first monthly fall in 5 months. Now, that doesn't sound a lot, but if you look at the housing stock, it's up almost 50% year on year. And we're going to talk a little bit about, we're going to break for a second here and talk about price anchoring, because this is a perfect segue into price anchoring. What is price anchoring? Well, essentially, it's when people see a house sell down the road and then they say, oh, that house sold that's like ours for $700,000. So we're going to put ours on for $700,000. It's when people have a price in their head that they feel their home is valued at, whether it is or it isn't. And obviously the realtor is not going to argue with the homeowner about the price. So what tends to happen is at the top of these bubbles, it takes a while for people to adjust to the new normal, which is a lot less buyers, a lot more competition, and that they have to start reducing prices. Now, usually it doesn't take that too long when it's this type of thing, because again, everybody's trying to sell. Nobody wants to be caught in the crash. And a lot of people have a gut feeling about this, that they know deep down that this is a bubble and something's not right. I guarantee it. So realestate.co.nz spokesperson Vanessa Williams said, new listings and stock numbers are starting to reflect 2018 and 2019 levels before the Cerveza sickness. There were just 15,829 total homes available for sale around the country in February last year. Okay, and there you go. So 23,000 right now. So that's quite an increase. That means Kiwis had 7,441 fewer homes to choose from a year ago, which is significant when you consider our population is now over 5 million. So the thing is, which is also good to note, is New Zealand has high immigration, exactly like Canada, because it's a mess, exactly like Canada, with demographics and the birth rate and everything like that, because they've had these housing bubbles exactly like Canada. This is why I feel like New Zealand is a great example to look at for us down the road. And it's interesting, because now they've got more homes to choose from, but probably less buyers are out there because rates have gone up. They can't afford as much. So, that's a lot of less buyers that are going to be coming through the door. So the increasing numbers suggest that we might be moving back towards pre-Cerveza levels, and this will be welcome news for property seekers. And what realestate.co.nz says is a hint the property market might be cooling. In February compared to January, average asking prices dropped 11 out of 19 regions. While it is too early to call this a trend, if vendors are asking less for their properties in February than they did in January, it could suggest a slowdown is on the way. And I think that's pretty much a given, because obviously this parabolic run. Now, the thing is, it's going to be really interesting what the Reserve Bank of New Zealand does, and whether they just keep hiking now. And that is really going to set the tone for what we should expect here, because obviously they have a liberal government, and it's the same World Economic Forum type leadership that's in New Zealand as it is to Canada. So it will be very interesting to see what they do. So then it goes through. So obviously Auckland is the capital city, I believe. Prices dip 1.3% month to month. If you compound that, that's quite a drop, actually, considering it's the first month of decline. So average asking prices also fell all over these other places. I have no idea where they are, although I recognize the name Wellington. I'm pretty sure that's a big place in New Zealand as well. At 6.2%, the biggest monthly fall was in the central North Island, where the average asking price was 813,480. 6.2% in a month. 6.2% in a month. Did you just hear that? I wonder whether this is one of the places where a lot of people were moving to when it was work from home, and they blew up the housing market there and turned it into a penny stock, essentially. And now it's going to come back down to reality just as fast. So I think that's going to be really, really interesting. So, and then it just talks about other small monthly rises that happened in these regions. At 8%, the biggest monthly rise was in central Otago Lakes, where the average asking price was 1.33 million. So you've obviously got intense volatility now, which is a given at the top of any bubble. So you got prices going down a lot, prices going up a lot, all over the place. But the big centers, Wellington and Auckland, down. So that's where the majority of the population lives. Then it basically has it on a map for you so you can figure it out. Yeah, so, and it's on a national basis, the average asking price was up 23.1% year over year. So that's interesting, isn't it? It's and look, you've still got some record high average asking prices, but it's the sign that it's starting to cool. And guys, you have to remember the effects of the 1%. The effects of the 1%, they haven't even started yet. This is all the effects of the 0.75%, and now they've gone to 1%. So we've got to keep an eye on New Zealand and see what happens there, because that is going to be an incredibly interesting thing to follow. So I just wanted to go over to the markets now, because the insanity in the markets is just insane. So here we have crude oil that has gone absolutely parabolic, as you can see. So crude oil is just absolutely flying right now. If you look at it, it's getting right back to these 2008 levels right now, which is really, really bad news for the economy. Why is it bad news for the economy? The thing is, crude oil, guys, is an indicator of recessions coming, because when crude oil is really high in price, we normally see a recession. So it's going to be very, very interesting to see what happens. Obviously, this is going to lead to an economic slowdown. High oil prices always do, because businesses, they struggle with their energy costs, which they are struggling to pass on to their consumer. So the funny thing as well was gasoline futures. I wanted to show you that. Trying to find. Here it is. Wow. Oh my God. I did not realize this went up so much today. That is nuts. So this is gasoline futures. I cannot believe. I cannot believe. Oh man, getting a dry throat. I cannot believe the price for this. This is insane. I mean, I'm pretty sure this is, yeah, it is. This is above 2008 for gasoline futures. Yesterday, I cannot believe that this has gone this high. So this is gasoline futures. So this is what we really should be paying attention to, because gasoline futures are essentially what we pay at the pump. We don't really care about oil prices so much. Yeah, they're a contributing factor to gasoline prices, but refined gasoline is what we're buying at the pump. And look at this, guys. This is insane. I did not realize it moved so much today, because yesterday it was around 320. But to move this high to all-time highs, this is obviously where it broke all-time highs. That is nuts. Absolutely nuts. I cannot believe. And all the markets, intense volatility. Yesterday we were down massively. Today we're up massively. It was interesting also to see what happened with the Canadian dollar, because I didn't kind of expect this, actually. I thought what would happen would be the same as New Zealand, but then the bond market was doing something completely different during that time. So the currency strengthened as the yields went up on the bond market. So it's very, very interesting. Very, very interesting. But still, if you look back to, I don't think it's going to let us do it. Maybe it will. 2008. If you look back at 2008, guys, when oil and gas was this high, look at where the dollar was. It was almost $1 to $1. And right now, you're at 79 cents and you're at the same price. So that just shows people obviously are still thinking the Canadian dollar is very risky because of the high levels of debt. And I'm sure, even though we've had a rally in the Canadian dollar, that it will probably pull back once the Fed raises rates, which is pretty much going to be a guarantee now after the Bank of Canada did it. So it's very, very interesting what's happening in the Canadian dollar. I mean, if it gets up to like 82 cents again, then I'll be selling a lot more of our money out of the Canadian dollar. I'm definitely watching it against the Swiss franc. And but yeah, this is Just insanity, guys. So I'm just going to see here if we had anything else that I wanted to cover, and then I'll check what's going on in the comments. So yeah, I'll show you this real quick. So I highlighted this story, but obviously what I want to highlight out of this is Canada's central bank says more hikes are coming. That's what I really want to highlight. And then we also have Royal Bank and TD raise the prime rates, which is a given pretty much now. So yeah, that's pretty much where we're at, guys. It's absolutely insane. So let me just see what's going on here in the comments. I figured BC would be, where are we? BC 196.9 now. Wow, in Victoria. That is insane. What? This is just looking for any. Gloria, Kevin, Mark, Trent, nice to see you guys here. How high? This is a good question. How high the interest rate should go up to collapse the housing market? Well, essentially, from what we're seeing in New Zealand, probably just going up to 1.5% would pretty much seal the fate of the housing market. Now, obviously, you have to remember it would have to stay there for some length of time, like at least 3 to 6 months to see a material effect in the housing market. But I don't even think that you'd have to get that high. I think it's going to be really interesting now to see what happens in New Zealand over the next 6 months. And I'm going to be paying more attention to New Zealand, what's happening, than to Canada, because there's bound to be a lot of speculation happening. There'll be a lot of mortgage brokers trying to get the FOMO, and people have so much FOMO here in Canada. So I'm sure there's going to be another rush quickly to lock in low rates and try and catch that falling knife. But really, it could be low. It could be as low as 1%. I mean, the housing market is already starting to go down, and supply is going up drastically in New Zealand. That's at 0.75. They just went to 1%. So let's keep an eye on what happens there, and that's really gonna be good. Gloria Freeland said Canadians need to prepare for economic changes, whatever that means. You know, I've always said, and this isn't tinfoil hat, this is just what I think. If they really wanted to get people do a great reset, you will own nothing and be happy and all of that sort of stuff. The way they would do it is by crashing asset prices. That is the way that they would do it. So much to the contrary of what the normal person thinks. The normal person, a lot of people who have heard of the Great Reset probably think that, hey, I need to buy right now because otherwise I'm going to own, I'll own nothing and be happy. The prices are just going to go up forever. Well, the thing is, the home ownership rate actually is pretty high in Canada. People have a lot of debt equity here in Canada, and that's how they're able to move around and afford these insane prices. But if you crash the market, that would give loads of people essentially a margin call who leveraged out their home equity. The dominoes would just collapse. And interest rate hikes and inflation would be the perfect way to justify it, because then it's not their fault. And this is the running theme with the government. It's not our fault. We're censoring this for you. It's to protect you. Well, who's it really to protect? I don't know if you saw, but RT News, which is funded by the Russian government, is being took down now. And you might say, that's great, screw the Russians, whatever your thoughts are on that, I don't know. But the thing is, it's censorship. It's censorship. So we now can't see the other side of the argument. We only see one side of the argument. So then that makes it extremely difficult, doesn't it, to know what's going on? And that is a breeding ground for people getting suspicious. When they censor stuff, that's when more people get suspicious. If they just let people look at both sides and decide for themselves, then it's totally different. But YouTube has took down RT News. There's a number of different things that are taking down RT News, and it's just insane. And I do not support war. I don't support war anywhere. But what I find infuriating about what the Russia-Ukraine thing is, America did the same thing as Russia with Iraq. And it's just it's insane that they did that, and then they're coming out and doing all this thing. They're poking the bear with Russia, essentially, because you imagine you're Russia and you're like, you go into Iraq and do the same thing of us, kill thousands of civilians, take down a government, all the rest of it, and you say that it's because they're a nuclear threat, yet you find no nuclear weapons. What is really the difference? But yet Russia is getting hit with all the sanctions. They're being absolutely just scrutinized to the hills by the mainstream media, essentially. And again, I want to outline, I don't support war and I don't support Russia, but I do look at what's going on around the world, and instead of just seeing articles that are about the war in Ukraine and getting suckered into it, I think, well, hang on a second. Before we start pointing the finger, I think we need to look at what's happened in the past, which is what we're doing right now, which is funding a war in Yemen by supplying weapons. Canada, the UK, the US, they're all supplying weapons to Yemen, and they're being used to kill civilians. And Biden said, I'm not going to do it anymore. I'm going to stop it. And then in November, he did an arms deal. We covered it on this channel. So all these politicians, they just bow down because there's corporate interests. There's the weapons, like the weapons business is a massive part of the economy. It's a big business. So yeah, and that's exactly right. It's called having an open mind. There is always more than meets the eye. And that's exactly how I feel with everything that happens right now, especially with the government and what Gloria said there about Freeland saying that. It's not a good thing. And again, like the Emergency Act, what happened there? Just a disaster. But anyway, guys, thank you so much for being on the stream. Once this eventually figures itself out, because it'll process, YouTube has to process this video, I will cut out the front end of the video so that nobody has to sit through that 15 minutes of garbage. Garbage. I don't know what happened with that microphone because I've used it before and it's been perfectly fine. So yeah, I have no idea. But anyway, guys, smash the like button. It'll help people see it, or maybe don't, because they're going to just see 15 minutes of garbage at the start. But anyway, guys, thank you so much for watching. Thank you all, Trent, Gloria, Kevin, Greg, all you guys. Thank you, Greg, for the super chat. And I will see you in the next video. Peace and love, guys. Bye-bye. Take care.